Hi traders, in this video we're going to be taking a look at the US dollar CAD. I'm going to show you a strategy that we can implement on this at the end of the video, so stick around for that one. But we're going to talk about the conditions around this market. So let's dive straight in. I'm going to put new strength and weakness analysis. I've changed the conditions to strategy, but we will also be discussing the conditions in the market. So what I've got here is I've got the US data coming up this week. There is some CAD data as well coming up, which involves some GDP data, and as well as that we have some speeches by Governor Macklem. But obviously the dollar is going to be dominant in this currency pair this week because there is so much data surrounding it, including the federal funds rate as well as the NFP reports. Fed funds rate expected to remain the same at 5.5%, and the market really wants to see if Powell is going to talk about, you know, keeping rates high for longer, or whether there is a potential hike on the cards, as inflation has been a little bit sticky in the US. What's really going to be interesting is this labour market statistics. You know, if the non-farm employment change stays above 200k, that's still considered good growth. That is a labour market that is proving to be resilient over and over again. So what else can we talk about with regards to dollar CAD? Well, we can talk about the exports of oil. You can see here crude petroleum here equates to around about 123 billion. That was the 2022 numbers, and you can imagine that's obviously grown since then, but around about 123 billion of exports from Canada to its biggest customer. Its biggest customer is the United States. Obviously that makes a lot of sense because they share a border essentially, so it makes a lot of sense that they do a lot of trade with the United States, but it makes up for 20.9% of their total exports. So oil prices play a big part, and that's where the correlation comes in. Now, looking at the strength and weakness analysis of the currencies this week, we can see CAD did lose a little bit of strength overall last week. I mean, against the dollar, it is stronger at the moment. The dollar losing a little bit of ground as well in that reversal zone, but I think the dollar is poised for another move. We just need to wait for the right setup, and that brings me to the conditions of this market, because technically we are making new highs. You know, we breached this 136 handle in here, which was a very large sticking point for the market for a long period of time, and then we broke that quite forcefully, and since then we've just been on the retreat. The market has just been pulling back. We didn't quite reach the key swing highs of the or the October 2023 highs at around about that 38.75 handle, and we've just started to pull back, and that's pretty much in line with an oil chart. If you look at the oil chart, you will see that we're in that kind of secondary phase as well, which is what I'm suggesting that the dollar CAD is in as well. You know, I look at the market in phases. Do we get a rally, pullback, rally? And this is my primary, secondary and primary phase, and I'm looking to see if the conditions are met for that idea to go long. So at the moment I'm pretty bullish dollar CAD, but I need to wait for the strategy setup now. So let's bring on a chart and I'll show you what I mean by the strategy setup. So I'm on the live dollar CAD chart. I'm looking at the market here, and this is what I mean by strategy now. So if I show you this downward secondary phase in the market here on a daily chart, if I go to a weekly chart as well, you'll be able to see that a little bit cleaner. If I go to a 4-hour time frame, you'll see that the market is in a downward trend here. It's making lower lows and lower highs here, and that is indicative of a secondary phase in an overall upward trend. In the primary phase here, you can see that the market makes higher highs and higher lows, and you can see that the primary phase is considerably bigger than the secondary phase. So that's what I'm looking to do. So essentially I need my 4-hour market to change first here. I need my 4-hour market to give me an idea that price is matching my overall bias, and if it doesn't, I have to walk away from this market. But essentially 136 is my sticking point. If we breach back below 136, I'll reconsider my analysis here, but for now we're kind of holding. I'm kind of holding above the 136. Now what I want to see for my condition conditions to be met is a breach above this, making 4-hour highs and new 4-hour higher lows, because what that will do is give me a strategy setup. Now we're going to the 30-minute time frame here, and I'm just going to zoom out and go back to when we were in that primary phase. Okay, now this is a strategy you can apply to your charts as well. It's a very useful strategy. I find it's very good for trend analysis. Only works in trending conditions, does not work in ranges, so just make sure you keep that in mind. Does it always work? No, it works around 70% of the time, which I still think is a really good strategy. And that is looking at when the market is in a trended environment on a higher time frame and looking how it breaks back above the 50 moving average. So for instance, we break the 50 moving average here and the market starts closing back above it, and we start rallying back to the upside. We can see it happens through here a second time as well. Okay, let me just copy that over. There we go. And then it also happens over here. Okay, and it also happens over here, and it also happens over here. Now I did actually take a long which was a loser on this market, so I actually took a long here, which was a losing trade. But I'm going to show you what I mean by this. So if I took 1, 2, 3, 4 positions, 4 would be winners, 1 loser. But essentially the way I like to use this is by adding the stochastic filter in as well. So I wouldn't necessarily take the first position because it's kind of in the middle of the stochastic, but notice the second position here. When you start to see a huge move to the downside and then a stochastic crossover here with the K and D line, then I like to look for opportunities long. So here would be looking at longs maybe above these kind of relative highs there, stop loss below a swing low, and looking for a continuation to the upside. It would be brilliant as well if it was in line with something else. So if it had like an in line with a previous swing low, bit of support and resistance, it works even better. But you can see here as well, again, we have a period of consolidation. We get the signal line here from the stochastic, and we get a break above the 50 moving average there. You can see we're kind of closing below it here, and then the market starts to break back above it, and you can see here the market then takes off to the upside. So really speaking, I'm waiting for the same conditions again to form, because if I look at the conditions now, we know that we're in the secondary phase on a weekly chart, and you can see since we've crossed over here, look how the price reacts on the other side of the 50 moving average there. Yet we get a nice break through it at some point, but then this is where you can use your support and resistance. Consolidation, we talk about this a lot. Consolidation equals volume. The market comes and retests that volume area and then starts breaking back to the downside here. So essentially what I would be looking for is this condition to change. If price starts to break higher on the 4-hour chart and we start breaking these highs, we could get a crossover in our averages here, and then you can apply a strategy just like this one in order to try and take advantage of the market. So that's what I'm going to be waiting for. Could I obviously trade the secondary phase in a weekly chart? Absolutely. I don't think there's a problem in doing that at all, as long as you understand that you are trading a pullback phase, which for me would mean that you need to trade at a sort of lower risk. And again, my favorite strategy is more looking from highs and lows. So I like to identify previous highs and lows, and then I like to look at the catalyst around that on a lower time frame. But I think this strategy works really, really well if you are looking for a trend-based system, and it's still something that I apply every now and again. So keep that in mind. I hope you enjoyed this video. If you did, give it a thumbs up, subscribe down below. Did you like the strategy or not? And I'll catch you in the next video.